Hello and welcome to the latest edition of the ADS podcast. We'll be discussing yesterday's budget delivered by the Chancellor. I'm joined by ADS Chief Executive Paul Everitt, who will help us digest what has been announced and what it means for our sectors. Hi, Paul.
Morning, Jonathan.
So one of the first announcements from the budget was the extension of the furlough scheme to the end of September. And furlough, of course, has been essential to businesses suffering lower than usual demand and who have been trying to protect jobs for the future. Paul, what are your views on this extension and what it means for our members?
So we were very keen to see the furlough scheme extended. We know that many of our businesses are going to find it at best a very slow recovery, even once the most of the constraints on working and people's movements are lifted. So having extension of the furlough scheme will be important. We estimate something like 15,000 employees in our sector are taking advantage or taking benefit from that furlough scheme. So its extension was really, really important to avoid a significant number of additional job losses.
And another key aspect of the business support from the government was around finance. And we know the coronavirus business interruption loan scheme is coming to an end. And the Chancellor announced yesterday a new recovery loan scheme. So, Paul, do you think there are any concerns that this will not meet the needs of our members, maybe smaller firms who are particularly looking for finance that doesn't weigh them down with further debt?
Yeah, so that was our really one of our central asks over the last 6 months or so, has really been about longer term finance and what we would see as more patient finance for supply chains. So whilst in some respect the extension of the adaptation of the emergency schemes and loan schemes, I'm sure will be beneficial for some. I think the reality is lots of businesses in our sectors and in others will have already reached the limit of what they can sensibly borrow, either through these schemes or through their general borrowing from the banks. So I think that we've missed an opportunity, or the Chancellor has missed an opportunity, to create something that was more focused on the longer term and ensuring that companies could come through both the what will still be quite a difficult period for a year or so, and be able to invest in their longer term competitiveness.
And I guess to remain competitive and build the new capabilities needed for the future, our members and businesses in our sectors will need support to invest. And yesterday, the Chancellor did make some announcements in this area. One of these was around a new super deduction for tax. And under the scheme, companies investing in any qualifying new plant and machinery assets will see a benefit of 130% first year capital allowances. So this upfront super deduction will allow companies to cut their tax bill by up to 25p for every pound they invest. Paul, do you think this is good news for our members? Quite a lot of our companies, particularly in the aerospace sector, are still struggling from the impacts of the pandemic and may not be able to afford to invest, even if they'd like to. So what are your views on that?
So I think it's good news. One can't, it's definitely an incentive for companies to invest and invest now. I guess my concern really is that what we have too often seen is kind of these temporary increases in investment allowances. So they are time limited. So it's the next 2 years, which will be difficult for companies. I'm sure there will be companies that are able to take advantage, and they may even be encouraged to. But actually, most companies don't make short-term decisions around big capital investments. They are longer-term decisions. They tend to be kind of planned and linked to maybe major changes in their products or the introduction of new products. And those are not, unfortunately, linked particularly closely to budget cycles, or certainly the government's budget cycles. So I think, in essence, it's a good thing, and it's a strong signal. I think we would probably prefer to see something that is more longer term and more durable, so that more business will be able to take advantage of the incentives in their normal planning cycles. And I think this is perhaps an appropriate time just to step back a bit and say, there's obviously good news in the budget. As we've mentioned, the furlough, some of the investment allowances, business rate holidays are all things that are going to help businesses and their cash flow in the short term. I guess the thing that was disappointing is, despite government talking about its ambitions for, building back better, desire to be, a green industrial revolution, to be a global trading nation, to be a science superpower, all of those ambitions, I think industry and our industries in particular would support and embrace. But actually there isn't the financing at the moment to support those commitments. And I think if we look slightly longer term, we know that we're going to go into another spending review towards the end of this year. But actually, it's going to be a fight, because the amount of public expenditure that is going to be available is going to be quite limited. There isn't a big uplift over the next 3 to 5 years in the way that I think is necessary in order to seed a strong economic recovery.
And I guess in terms of the budget yesterday, there are a couple of, announcements around consultations around R&D tax credits, for example, looking into the kind of longer term picture around how they can help investment going forwards. We also saw net zero ambitions featuring, and there was a couple of announcements around the government announcing it's issuing its first sovereign green bond, establishing a new UK infrastructure bank to increase infrastructure investments around helping tackling climate change and promoting economic growth. Do you see these playing a role in how we can see more investment and growth in our sectors coming up in the future?
Well, I certainly hope so. I mean, I think we would definitely support those measures around our reviewing and looking to further enhance R&D tax credits or tax reliefs around R&D. All of our sectors are very much at the forefront of innovation, and their long-term kind of economic and industrial success is built upon being able to create intellectual property here in the UK. So all of those measures are of interest, and it's good to see. The infrastructure bank again is interesting, but we don't really know whether we don't know what its mandate is going to be, and what kinds of projects and programs are going to be it's going to fund. And I think this is kind of, the government says the right things and is saying the right things. It's just difficult at the moment. There seems almost an abundance of initiatives of one form or another, and within the budget, the infrastructure bank was there. There's a sort of help to grow scheme there. There's a future fund there. A number of other things. And it's quite difficult, I think, particularly for smaller businesses, to really navigate some of this. And whilst I think the intention is an appropriate and a good one, that the concern is that companies won't be able to, or the companies who really need the assistance won't necessarily be able to find their way through the various initiatives to actually key into the opportunities and the support that may actually be available. Now, that's, I guess we would say from an ADS point of view, that's one of the things we need to look at, and to see if we can help companies do that sort of navigation. But I also think that in some respects, we could, and government could be making life a little bit easier for businesses in the way that they're addressing this.
I mentioned kind of the net zero ambitions that the Chancellor did touch on in the budget. And obviously, from our perspective at ADS, particularly in the aerospace sector, we can play a huge role in working towards net zero aviation. So what else would we like to see from government to help us achieve those goals?
So again, I suppose if we focused on the crisis, we would probably say again that the disappointment from the budget was there was nothing sector specific for aerospace and aviation. There was some continuation of support for airports, but there wasn't a great deal to recognise the fact that the very significant constraints on international travel are having a very significant impact on our sector. And whilst the Prime Minister's roadmap was encouraging, I think the challenges may well be that there will be constraints on international travel for longer than we would ideally like. And in those circumstances, that's going to be quite difficult for companies. So for us, the key elements have always been we need to see a step change in the amount of investment in aerospace technology if we are going to be a genuine global leader in delivering net zero aviation. You know, we have an incredibly effective mechanism in the Aerospace Technology Institute, which has already created a portfolio worth the best part of £3 billion worth of jointly funded investment into many of these areas of technology over the last 6 or 7 years. You know, we could have sort of been bold, or government could have been bold and given it the budget it needed in order to significantly increase the rate of progress. Now, the budget cycles means that, and the fact that we didn't have a multi-year spending review in November of last year means that we are all going to have to work quite hard over the coming months to make our case and ensure that aerospace is given appropriate priority in the next set of spending discussions, which will happen, I guess, around October, November of this year. We all need to sort of, as an industry, recognise that we have to make that case. I think the other area, again, as we've talked about a little, is around how we provide that longer term and more patient funding for smaller businesses in supply chains. Again, it's crucial for aerospace, but it is not unique to aerospace. There are a whole bunch of businesses around the UK who are part of manufacturing supply chains who are facing exactly the same challenges. What we see from government, and this is true, I think, over a number of different governments, probably in the course of the last 20 years or so, you know, there are quite innovative schemes for startups and for scale-up businesses. There are much less finance and longer-term finance schemes for more established businesses that are already part of an established industry, but who are facing significant technological and I guess operational change, which is what we see in aerospace, we see it in automotive, we see it in a number of other sectors. So it's not just that we have to get to net zero, which is a big challenge, but that we are facing competition for that business from a whole host of countries and businesses around the world.
Yeah, and I think another a key area of focus, I guess, through the pandemic and kind of in the budget also is around how do we support the kind of future skills in our sectors? How do we outline a kind of a path for new entrants into our member companies? And I guess it was good to see a focus on apprenticeships in the budget yesterday. There's been a continued focus on that throughout the government's support over the last year. Particularly just picking out a couple of the announcements. There was an announcement around a £3,000 incentive for companies who hire apprentices between April and September this year. And there'll also be a £7 million fund to help employers in England set up and expand portable apprenticeships to help people work across multiple projects with different employers. And some of these aspects might be helpful. We've been calling for more flexibility, I guess, with apprenticeship funding and the levy in the past. I guess one of the key questions here is, will companies be in a position to take on new apprentices in this time? Paul, what's your view? Could these adjustments be beneficial to our sectors?
So the focus on apprenticeships is good. Some increase, the sort of doubling of the incentive for people or for companies taking on apprenticeships is good. I think our assessment previously was that, given that each apprenticeship, and say if you take on an apprentice, that's a long-term commitment, that's a sort of 3 to 5 year commitment for a business, and that is, more like £150,000 of potential expenditure by a company. So even a £3,000 incentive, whilst helpful, is unlikely to be making the difference between doing it and not doing it. So I think it's welcome, but probably not quite enough to significantly shift the balance. I think the disappointment, fundamentally, is that the apprenticeship levy is not effective and is not working well. And we had hoped to see a rather more substantial review and reform of that levy to provide the the incentive, or a larger scale incentive, so that we don't miss, or a generation of young people don't miss out on the opportunities. I think we've been fairly fortunate in, across our sectors, so aerospace, defence, space and security. I think whilst we have seen some reduction in the number of apprentices being taken on, most companies have taken a longer term view and certainly looked to retain as many of the new places as they can. So again, I think in our sectors we are. I don't think it's the incentives which are driving the behaviour. It's actually a recognition of the long-term needs of the businesses, which is driving our commitment to apprentices. On the flexibility, I think I can see in a number of sectors, and I think the creative industries were very keen, because the nature of the work in those sectors means that people are more likely to move to a number of different jobs or a number of different employers during a relatively short period of time, because that's the nature of demand. I think in our sectors, apprentices are a long-term investment. Companies choose to invest in them, and I think it's not their moving from company to company that's the challenge. I think there is a challenge that we've always recognised, which is that many of the good quality young apprentices who don't get onto the gold standard apprenticeship schemes of some of the big brands and global names, don't necessarily then move on to some of those bigger companies in the supply chain. They look to other industries or other sectors. So I think we would have preferred to see something that facilitated what they call clearing houses or whatever it might be, but a mechanism for ensuring that all those with an interest in our industries, even if they aren't able to join their first choice business, there is a mechanism to open up them, or open their opportunities to the businesses that are part of our industry, but perhaps not as well known as the global brands.
Absolutely. And I guess finally, you mentioned this previously around the lack of sector-specific support for aerospace and aviation, given the kind of huge impacts the pandemic and the restrictions are having on many companies. So we didn't see that yesterday in the budget. So kind of looking forward, what would you say our priorities and area of focus are now for getting the sector supported and restarted?
So, the first thing I think is we'd like to be able to help ourselves. And to be able to help ourselves, we need to be able to fly again. So there is currently a global travel task force that the government has set up within government to look at how we can chart the course to reopening our skies again. It is a difficult challenge, and I guess I always find myself in this position, which is, we're in part of a global health pandemic, and it feels churlish to say to government that it needs to do more and more quickly. But my sense is we do need to be more proactive in building relationships with some of our international colleagues to set up more resilient travel corridors where we can be assured that those people travelling are not a potential risk, either risking their own health or risking transmission of the virus. We believe we can do that in aerospace and aviation. I think that over the last year, we have not seen aviation and air transport as being a major factor in the transmission of the virus. There have been transmissions and new variants, but by and large, that they have been relatively small in number, and the risks associated with aviation are relatively small. So we just need to get a pragmatic approach so that we can get the skies open quicker. And then we need to start to really do the work around the longer term and ensure that businesses have the finance they need in order to make the investments, and in order to ensure that it is the UK and UK businesses which are driving the net zero agenda. And to do that, as we talked earlier, we do need to see government provide some additional support for R&D, longer term research and development. We're doing a lot of work at the moment. The Aerospace Technology Institute is doing work around Fly Zero, looking at the market and the technology challenges in order to reach net zero. And within a relatively short period of time, over the course of the next year, it will have some options that could drive faster achievement of those net zero goals. We would like those to be financed and financed in the UK. So finding a way of doing that is going to be quite important, and again, that will feed into that spending review we anticipate in the autumn. And the other is still longer term and more patient finance for the supply chain. We have to resolve this because other countries are supporting their businesses in a variety of ways. In the UK, we've been fortunate with the furlough, and also we saw the big increase in defence expenditure announced towards the end of last year. So these are good things and are helping, but if we want to get the best from the UK supply chain, we do need to give them the resources they need in order to make the investments. The longer it takes them to get that finance, the more likely that the opportunities will go to more aggressive countries elsewhere in the world.
Absolutely. Thanks, Paul. That's been a really useful and interesting discussion, both in terms of the breakdown of the key announcements from yesterday's budget, but also kind of, I guess, the kind of the forward look over the coming months, where there's still a number of challenges to overcome, but hopefully we can move forward, both in terms of the key financing and funding aspects that our members need, but also the kind of policy that government puts in place to restart international travel in the most resilient way possible. So thank you again, Paul, for joining us on today's podcast.
No, thanks, Jonathan. And again, to those who may be listening, obviously there's a lot more detail available on the ADS website around what has been announced, but also opportunities for you to tell us what you think of the announcements and where you think the key priorities are.
Great. Thanks, Paul. And you can watch our podcast on YouTube or subscribe through iTunes and the ADS website. So thank you for listening, and goodbye for now.